Turri Investment Management is a small real estate advisory boutique firm. We mostly provide support to international investors willing to invest in Italy. And we basically assist them through the origination and structurings of real estate deals. So we support throughout the whole acquisition process and when requested within the development management. We have basically specialized ourselves during the last couple of years within the resi sector, which means, as we said already, quite a diversified set of situations like student accommodation, micro-living, in the hotel sector, in the logistics. Apparently that was our set of investors requires.
Conrads. I'm a German qualified real estate lawyer focusing on real estate transactions and ESG. I'm a member of the German real estate legal practice at PwC, which consists of 25 real estate lawyers, and I run the German desk at PwC in London.
Douglas Edwards, Head of Equity Raising Client Services of CORESTATE. We are a listed German company with a speciality in micro-living, city quarters, as well as a widening pan-European footprint, 28 billion of assets under management, having clients across 4 different equity sources, family offices, high net worth, to institutional, domestic and international. And today we're delighted to be here because clearly we see, in particular with micro-living, opportunities in this market.
Let's just start with a couple of things. Maybe let's start with you, Douglas. Just in terms of the last 12 months, you're obviously busy doing equity raising. I suppose, what have you seen over this year? What are some of the big changes that you've seen?
I think Thomas has already picked up some of the changes. Fundamentally, we're seeing a movement out of retail, significant one, into residential and the alternatives of residential. The office sector, and I'm talking purely at this moment Germany, but I can talk pan-European. In Germany, we're looking at urbanization and commercial in a different mindset. We're not looking at single asset plays. Thomas was making a point about commercial. We're seeing the changes in city quarters. So we see that there is a changing dynamic, and the international investors, both from the Italian, European and international markets, are really looking at their urbanization platforms and how they're looking to go into the sector. Logistics clearly is a hot topic, but the availability of investments is difficult. We see France being the hottest location for logistics. Germany, is, again, Thomas mentioned, is very hard to find development. One of the problems we have in Germany is land values. And you are going to find it extremely difficult to do new build in Germany unless you are a domestic player. There are a lot more wider opportunities elsewhere in Europe when one looks at pure development. But I think if you just go back to sentiment and sector, residential alternatives, and logistics are clearly the 2 key areas, I would say, Richard.
Good. I mean, it's interesting when in the sessions that we've been doing, probably, I mean, I remember starting out doing student housing around 5 years ago, 6 years ago at MIPIM, and I think there were 12 people around the table. And then when we did student housing this year at MIPIM, it was 450 people were there. And we're starting to see the same in micro-living, co-living, senior living, healthcare. All of those have been topics that we've covered this year. And interestingly, in the PwC Trends Report, I notice, Thomas, that actually both this year and I think last year it was the same, that out of the top 10, it was almost 80%, 8 out of the top 10 were to do with living. Is that right? And from the analysis you're doing, what's driving that? And I guess where's the next opportunity, Thomas, maybe in terms of, do you see senior living, particularly if we're looking at Germany, do you see co-living, senior living, healthcare, do you see those, because they're obviously not a big part of the market at the moment, but do you see that growing in the same way student housing has?
Talking about senior living at the impact. Market, we saw several transactions in the market, in the sector, but again, if you look for internationally, like private equities, they see it always as a platform. They want to grow the platform. We've just seen a big logistic portfolio sale from Apollo. They just harvested some single assets, brought it up to 1 billion, and brought it back to the market. And you can make good margin out of this institutionalize of large portfolios. I think CORESTATE was also pretty successful then in high street retail a while ago. And the same is for healthcare. There's still it's still a granular market. I think there's not that relevant large player. Hospitals are a bit tricky in Germany because it's all subsidized and you have to go really deep. So I guess there will not be such a big, let's say, hospital market. It's all owned locally. It's subsidized loans are in there. So it's complex. It's a pretty complex thing. But in senior living, definitely there are so many things to grow. And that always, the good news is in Germany, you have a federal system. You do not have like London or Paris, just one city. You have several cities, A cities, and you have a significant number of B cities in Germany, which are relevant for senior living, because senior living, you can also buy a senior living asset in a 50,000 inhabitant city, and we have a lot of them in Germany. So there's a big market, a deep market, and I don't see that huge player currently in Germany. So,
can I just? When I was at Corpus Zero, I created a 1.5 billion healthcare portfolio, which was Fliegerheim nursing homes, assisted living and medical office buildings. It is an aggregation play. Now that was 6-7 years ago. Today, the market's changed where you need to have both the asset side and the operating side. When you look at assisted living today, you need to have that connectivity between the service provided to our senior citizens and the actual quality of assets. So coming back to Thomas's point, it is an aggregation play. We are adding assisted living to our living circle. So we do the student accommodation, we do co-living, we do serviced accommodation. We are adding assisted living, but, and there is a but, it's going to take time. There is opportunities. We're about to close, on touch wood, our first transaction in the sector in Baden-Württemberg. So I would say, look at the sector, but don't jump into it yet, because there's still a lot to learn. But I think if you go with the right partner, it will be, for the long run, a sustainable defensive sector to go into.
Just one thing to add about the Italian market. What we have seen in Italy during the probably last 10 years is that, what we call senior living in Italy for the moment is nursing home, which what we call RSA, which basically needs accreditation. So during the last decade, I think, some of the Italian institutional investors have invested their own capital into this, but due to the lack of opportunities, due to the lack of new developments, and especially due to the lack of accreditation, at the moment we see there's much interest of operators to increase their offer even without accreditation. And this is quite interesting because they are opening to, due to the fact that the population is getting older and older, and due to the lack of beds we have, they are, of course, investing in high profitable city with the income per capita is high in order to have beds, even with people able to pay the full tariff. And this is quite a new situation for the Italian market.
And it's interesting because we've, in the sessions that we've been running around healthcare, it's quite clear that for the European market, for that to develop, there's got to be some, I suppose, standardization of the terms, because it means very different things in Holland to the UK, to Germany, to Italy. But one of the things that we've been increasingly getting, as well as a focus on those life cycle living investments, is also the sort of wellness ESG. And in a way, there's a connection there, because certainly a lot of the ESG side of it also sees impact investing as part of that. And I know this is a particular topic for you, Christiane, in terms of the ESG sustainability side. From my perspective, just as an example, up until this year, we had done, for the past 10 years, one event on sustainability each year. And since the crisis, in the majority of cases, it was the least attended event that we did, and we felt we were doing it almost as a charitable function because it was an important part. This year, if you count in ESG, wellness, we did 7 events. We did 3 at Ex-Boreal alone, just on that topic, on carbon neutral and those things. So from that perspective, it appears to be gaining in traction and interest. But what's your sense of it, Christiane?
Yeah, that's also what we see right now. Over the last 12 months, the interest in ESG products in real estate have increased a lot. There is a huge interest, and I think it's a mix of different drivers, starting with regulation, so with national, international climate and environmental protection plans. Then you have kind of a change in social climate, and you look at the Fridays for Futures demonstrations, or even the Extinction Rebellion. And what we also see, it's driven by LPs, it's driven by the investors, it's driven by the occupiers, who are looking for more quality, healthy working and living environments. So, yeah, can only agree.
And yes, do pick that up, yeah.
Can I add something? Effectively, there are a lot of discussion also in Italy about ESG, especially from an investor perspective, because it is something that in terms of asset allocation you need to consider, especially if you are investing through an investment fund. So it is something that is required. There are some requests for, let's say, from the occupants, etc. It is true that property is something that needs to be incorporated also in the new construction, in new planning, and it is going to take a while. Because I can imagine also, for example, if we look at environment, we have some big impact, not only from an energy standpoint, but also about what is going in terms of weather, climate change, etc., because we can see that there are a lot of impact that needs to be considered in new construction.
Let me bring this down to practical reality from a real estate perspective. We've just entered into a joint venture with Measurable, which is a US entity, which means across the whole of our portfolio, we're going to measure all output of all utilities on every building. We're then going to aggregate them, so we'll do a wholesale price, so we'll reduce the cost for our tenants, but we also, my asset management team, each asset manager will have a KPI on his utility output. We have a clear plan within 5 years we'll reduce our energy output on our portfolio by 20%. So coming back to PwC, and I have to give credit because we've worked very closely with PwC to put our criteria together, you will see that companies like ourselves, and going back to the point here, I cannot go into an international investor, I would say more so on the Dutch side or Scandinavian, without going through their ESG officer first. If I cannot satisfy their ESG officer as an entity, both as a company and what we're doing, let alone from our real estate, I will not even get to the portfolio manager. That is the difference of today's world and the importance of ESG. It's not a fad, it's not just a label to have, it's real and it's becoming significant. And I think both colleagues here will know that the EU are going to bring out new rules on impact investing, which will have a direct impact in all we do. So please, if you haven't looked at it, it is a necessity.
If I may quickly add to that, we also finally have the first case studies confirming that green buildings actually provide for higher distributable profits for investors. For example, the M&G real estate study on green buildings confirmed that due to better financing and insurance conditions, the value of the certified part of the property increased as opposed to the other part with uncertified, unsustainable buildings. And despite higher operating costs, so I can only confirm what Douglas is saying, so the operating, it's not only about saving operating costs and what you're doing, but it's about setting criteria and an implementation strategy, and then measure the performance.
One comment, there are other countries, if you look at Holland, there is a law in place that says if you are, I don't know the time frame, 5 years or whatever, you are not allowed to lease out the space anymore, and that's had a significant value impact. So just sit there and doing nothing is not an option, because it will significantly reduce your values. Yeah? It will hit hard, and that's a big change.
But I think I also picked up what was said earlier on. There is a social change. If you look at the nature of tenants, if you look at the younger generation X and Y, their demands as well as our demands are meaning that we have to have that social element in our buildings. We are space planners today. We're not asset managers. And we're sensitive to the demands of our tenants.
And that's interesting. We had a session yesterday morning actually on innovation and prop tech and data and how that was influencing the market. And very much the clear thing that came out from that is that you're not really looking at managing buildings in a way, is that these are when you're, there are a couple of small things that I noticed in news stories that began to make me think how important this was becoming. And you wouldn't have seen it here, but in London, for example, one of the universities banned meat products from all of the university restaurants, canteens, shops, because that was part of their trying to lower their carbon footprint. And if you take Amsterdam, the city there does not serve any meat at all at any events unless it's specifically requested by one of the guests as a dietary requirement. And that again has happened this year because of reducing carbon footprint. And these are all small things, and plainly the biggest thing that they're going to impact is the real estate creates more of that. But the other interesting thing, and I'd like to see what people's view on it was, the other point that was made, and it was also made yesterday morning, was that your biggest cost is actually staff, attracting, retaining the best staff. And so therefore actually the staff coming through will also, like the regulators, are demanding that it's that it's sustainable, that it takes in wellness. And do you think that's true for Italy and for Germany as well?
Yes, I think that it is something that is more and more considered from younger generation in terms of what you have to propose to young for attract people. For example, it's something that we are living on our own experience as PwC, because we are hiring a lot of graduates from the university. And we are completely aware about the fact that it is something which is part of the full package that you have to consider while attracting people. And it's not for making advertising, but effectively what we notice, we are performing global people survey annually. And this year we had a great result. And we think that one of the reasons was because of the new building. So young are very excited about moving and going in the new tower and having the possibility of working in a different way, in different spaces, and etc. So I think that also, let's say, real estate can make a part in attracting the new generations.
I'm just going to touch a little bit in micro-living student accommodation. Every one of our student accommodation locations, the manager is trained in stress management. We or they have saved lives because they identify issues in relation to occupiers and tenants. It is one additional element as a manager of an asset, and this is student accommodation. We're also looking at co-living. We can identify, or the manager can, a change in how the people's walking through the reception area, the way they change their clothes. Are they looking undressed in some ways? That is where that sensitivity about that generation is coming. We have to provide that service offering in our micro-living, which is moving into our office environments in a far more proactive way. Just one example, going back to what Richard was saying, the small details are adding up, and it is a generational requirement. But in student accommodation, that sense of emptiness, the sense of isolation, even in a student place, we're focusing on it. You have to look after your tenants.
Okay, good, interesting. I want to just come back to some of the things on the capital flows, especially and between Italy and Germany. And I mean, maybe there is no answer to this, but what I mean, Leah mentioned it in her presentation, which is if the domestic Italian capital is not investing in Italy, where are they doing? Where is it going? Are they putting it in the mattress under the bed, or where is that capital going? Is it waiting for opportunities in Italy, or is it heading towards Germany or outside? What's the situation?
I think we might discuss about this for hours. Meaning that I do not monitor a lot what happens outside our borders. Even though, of course, it's evident to everyone in this audit that there are a few names within the Italian big institutional who are start to invest abroad. I think that the main difference, I mean, we saw now that the 85% of the transactions being done in the last year was done by international investors. But also because in this moment, Italy demands for value-add opportunistic investments. And sad to say, but international investors are almost the only one doing this, taking this kind of risk and positioning themselves on this kind of return curve. Most of the institutional Italian investors, GPs or LPs, are concentrated on the core market. So core market, as we have seen during the presentation in Italy, is basically Milan, with a lot of competition. So, and I had to admit, lack of product. So all the Italian investors are concentrated in a very, very small competitive area. From my experience, the situation at the international level, I mean, meaning the international appeal for what's not Milan, is really high. And the world is a little bit changing. A couple of examples. First, as I said, nursing homes are not just anymore based on the accreditation. Someone else is looking at something different. So it means that there is courage, bravery within the international appetite for something different. Hotels, never has, in this year, you can have the sensation that there are new operators willing to come to Italy and invest into lease agreements. I mean, back to 1 year ago, we only heard of hotel management agreement, which means as an operator, just put a flag there, no risk at all. It works, I'm fine. It doesn't work, I leave without extra cost. Student accommodation, again, it's probably in this moment the most vibrant asset class in Italy. Everybody wants to invest in student accommodation. And the good thing is that student accommodation is not just Milan. Student accommodation means prime cities, just like, I mean, prime city in student accommodation is not Milan-centric or Rome-centric. It's where the university, where the highest rank, so the most of the international student population go to. And Italy for this is, I mean, we are quite lucky because also we have good in Erasmus program. So we do attract lots of students. I think Florence has got 100 university in the city. Of course, university which can attract probably 100 students a year, but they want to be there. So student accommodation means Milan and Rome, but also Bologna, Florence, Venice, Turin, Padua, Parma. Again, logistics. I mean, we see different things, but in this moment, all these things means also value-add, opportunistic strategy. And again, sad to say, but most of the Italian institutional investors are not ready or are not willing to take that risk.
Well, I see a slightly different perspective in part. I'm seeing a number of companies, pension funds, no, the insurance companies, sorry, beginning to go into pan-European safe core funds. We're seeing a diversification requirement. They have to diversify out of the Italian market. I have seen them going principally into, I don't mind mentioning funds like the La Sala Viva Fund or the Nuveen Pan-European Fund. But they are looking for diversification, and they're looking first in their core sectors so they do not get burnt. They're looking for core returns. I think that there clearly is a need for Italian institutions and pension funds when the law allows them to diversify out of Italy, just from a straight portfolio perspective. So we are getting people knocking on our door saying, can you help us come into Germany? And the way through for majority of them is through Luxembourg platforms. I don't think it's the best way, but that's the way most of them do it. In terms of capital coming into Italy, and I'll just pick up the point which was just made just now, I think the residential sector, I was here in Italy 10 years ago with Dari Hansen. You might know Dari Hansen and Europa Risorse. We did a few office buildings here in Milan and a number of residential. But today, I think the interest for my type of capital is the residential development as discussed, the student accommodation, the co-living, and adding eventually the assisted living. we have an operating platform which is already now working in Italy, and we'll be bringing capital to Italy. I'm about to close on a 200 million capital allocation for Poland and Italy in student accommodation. So I basically do see that the inflow of capital, yes, it's from a value add, not opportunistic, because we're looking to do repositioning of existing assets or new build, but that is where the interest and sustainable interest will come from. And Italy will then become part of a pan-European platform for the student homes and possibly in a student pan-European fund.
One comment from German capital side. I think there are two groups looking at the market cycle. There's one group of German LPs, larger or smaller LPs, thinking about if it gets a bit bumpy in the market, I will stick to the home market, which I know. That's, I would say, a smaller group, but I agree. Even if there's a crisis coming up, we should have portfolio globally. So, and then it's a question about, I mentioned it in my presentation, about hedging. So you look at Eurozone, which is easy because you don't have hedging costs. Step one, then you have some countries like Sweden, Poland, which is also higher on the agenda, I would say. And of course, most of them say we would like strategically go to the US much more, but with hedging, it simply doesn't make sense currently to buy there. And they're also looking into Asia Pac. So at the end of the day, most of them tell me, look, in a target, I would have 1/3 in North America, 1/3 Europe, 1/3 Asia Pac. In fact, if you then offer them and show them some opportunities, some funds, some direct from Hong Kong or from Singapore, yeah, they're reluctant and don't really, they want it. But most of them want to diversify. The German, I would say, gut feel is 80% of the German money is core plus money. Which could make sense. I think in this market cycle, it would also make much more sense to go into value add, but it's a problem. It's core money, Germany. So they are looking for core assets, stable, going to Milan, to Rome. I don't know if they're flexible, go outside of this big city. So like all the other Asian, European capital chasing the same opportunities. That's why there's so many, the returns are so low, but that's German mentality, I would say. From my personal point of view, it would make much more sense to do also a more value-add approach, the same in Asia Pac, the same US, I'm not sure, but Asia Pac definitely, and Italy definitely. And then there's more and more capital coming, and but they need good partners. And like some other international, like Koreans, they always bundle their money with a Korean LP, and he's doing the decisions then into the other countries. The Germans tend to do the same. They need a local partner bundling the money and then looking for a local partner in Italy and other territories, which makes partly sense for the mid-sized ones. For the larger ones, they also do partly direct investment. And then, of course, they have the group of the big asset manager like the Deckers and the Commerzreals and Unions. They are doing the big office towers, etc. But it's a pretty limited market. So strategically, I would say value add makes much more sense. And I think Italy offers a lot of opportunities for this.
That's really interesting. I just want to pick up one point that maybe extends them from also this topic about the increase in residential, because one of the things yesterday morning as well was that if you look at artificial intelligence and where that's going, what is it that machines can't do? They're not very good at judging. They're not very good at having brains because they don't have a brain. So therefore that the university cities actually will become real focuses. And I wonder whether that also picks up a point that you mentioned there, Leah, that, you know, whereas in Germany, obviously you've got a number of big, strong cities and investment across that, whereas really in Italy, it's mainly Milan or Rome. And interesting, there is a question that's come in. Thank you for these. There's a couple of questions that I'll pick up. One of this is about investments in the south of Italy. What is the most interesting sector there to invest? And I wonder whether this is, this picks up on this, that there are opportunities then to invest in other areas that weren't traditionally there, because we've got these new sectors coming through.
To get an international investor to go south of Rome is extremely difficult. Why? The nature of the market there, the local relationships and everything else have challenges. No problem at all. All I would say is that I have seen retail in the south of Italy be done by international, but we're talking 10 years ago. But there were problems, as people remember, definitely in Sicily, in terms of corruption, and in other parts of southern Italy. That, unfortunately, that political risk is something which the international investors continue to have. I think parts of Italy, the northern territories, or in the Lombardy and across to the Adriatic, and indeed down to Rome, is clearly areas where they feel comfortable. I would pick up on the point which Richard just mentioned. There is demand, and there will be demand in the university cities. I have no doubt at all. We were talking just last night over dinner, looking at Florence, looking at Torino, looking at Venezia. There will be opportunities for the micro-living in these markets. We ourselves, we have 184 cities in Germany, over 50,000. And we don't use the B cities. I know you use the B cities. I call them regional cities. But that said, there is going to be opportunity in these cities. But the south of Italy, internationally, will be and will remain, I think, for the foreseeable future, a difficult market for international capital. Make it very, very clear from my view.
I want to add one thing. Of course, I cannot disagree with Douglas. The investment borderline is Rome. No one within the national spectrum want to go southern. But the problem is, or the situation is, we have a south, it does exist, and it's profitable, despite of all. And of course, there is a huge lack of infrastructure, so it is difficult to go there, apart from all the other problems that are evident to everyone that Douglas mentioned. But the good news is that we know investors, new investors, apart from CDP, so from the government, who are looking at the south for the hotel investments. Of course, returns are completely different from what they would expect in the northern. We are talking about a 6% net, 6.25% net on a lease agreement basis. But again, is a good news. It's something new. I mean, probably the same question last semester was no appeal at all.
I think that probably it's always a matter of, let's say, of opportunities, in the sense that if you are looking at different asset classes, as for example hotels or also student living, is something which is very specific. So probably you need to look for products in different areas and zones where you are used to. So it is true that if you want to invest in office, you have to look at where offices are working and are in place, so it means big cities. But if you are looking at different kind of products, probably there is a room for investment also in other parts of Italy.
We were talking about assets and regions, South Italy, etc. I think it's important, and I completely agree. If I go, I don't know, a single asset in Sicily, micro-living, whatever, bring it to a German investor, he said that, no, I can't do it. Another point which is pretty important, which loan portfolios, that you also look at the industry. And I don't know how it is developed, but if you, as I've seen countries like Romania, step one is, and that's the typical private equity view, as you might also have from Dot. You need the industry which is developed. You need the right teams on the ground. You need the right, let's say, property asset manager, the right mindset for international capital. I think, and if you grow and have this platforms available, and then it is about a scaling business. It's about a portfolio size, and then you can also sell an asset in Sicily because it's part of the portfolio. And I see, look, I have a pan across Italy team. I have offices everywhere, and then people trust. Even a German LP might invest in something like this, but not if you come there and say, look, this is an asset in Sicily. Do you want to buy it? And he will say no, because so you need the industry, the infrastructure first, and then the capital will follow. So it's a bit of a chicken egg problem. But so I can't comment on the industry structure here in Italy, but that's what I've seen in several countries, especially if you have new asset types, new countries. It helps LPs to have this, let's say, track record, this committed team, reporting systems, language-wise. It must all fit, and then you can do, let's say, more exotic cities, more exotic asset types. It's then
touches Thomas's presentation. If you remember on the bottom left, he talked about platforms, AM platforms. We as a house not only have organic growth, we do M&A. We've acquired a number of entities. Just recently, we're closing on STAM Europe, which is a French asset manager. There will be such platform opportunities coming out of Italy, there's no doubt. But I think Thomas is right. We need to look at them for their fundamental footprint from a sector specific, their professional competence. But I do think that there are names here in this market where, if not a takeover, but a strategic alignment will make a lot of sense, which would help create the bridge to bring capital into it.
I have to say that as concerns also the capital flows from international investors in terms of nationalities, well, who we are seeing more now are US investors and also a lot of French, I have to say. Yeah, this is the second one.
Yeah, yes, that's right. Cardiff here, quite significant if I remember rightly. But no, I think the flows of capital will be there, but they need the bridges to create the right product and the right footprint. Going back to ESG, I would love to see Italy harnessing ESG even more than they are at this moment. That's another important area. These are the small elements which are building blocks to create the footprint which allow the core international investors to feel comfortable.
I just wanted to pick up on a couple of things. Regulation, obviously, one of the issues often discussed in terms of Italy. But what's the situation in Germany as well? I mean, so let's say, for example, you were Italian capital looking to invest in Germany. What's the situation, Christiane?
There are actually three important developments at the moment that investors should closely monitor over the next months. One is the change of the real estate transfer tax regime for share deals, actually. So the German government is currently working on a new kind of law which should tighten the current regime. So, for example, right now the thresholds of 95% in a property company shall be lowered to 90%, and the holding periods of 5 years shall be extended to 10 years, for example. And this law will come probably early next year. That's one of the developments. The other development is affordable housing, which also came up in our emerging trends survey. That this is one of the biggest concern for investors, and the German government of Berlin, for example, has announced that they're going to introduce rent freeze and rent caps. The German Property Federation is going to most likely to challenge that because it's not in line with the constitution. So we need to see where that goes. And then last but not least, as Douglas mentioned, there's a new regulation coming for all over Europe. It's the EU Taxonomy for sustainable finance, and it's basically a categorization system defining when an investment is sustainable.
Just a couple of things that have come in as well that I just want to pick up on. One of which is, and this is almost a whole afternoon in itself, this one could be, but which is, how do you see the impact of e-commerce on the retail sector and logistics? I mean, it'd be interesting just to pick up on the comparisons between e-commerce in Germany, Italy. In the UK, I think it's around 22%, and the view is that it'll sort of peak at around 26, 27%, and then that's the peak of it. But I don't know where we are in Germany, substantially lower than that, and Italy.
I'm not a deep retail expert, to my knowledge. 11 or 12% online and fast moving. But if you talk to retailers, of course, there are some lessons learned. At the beginning, a lot of retailers swapped completely from their spaces into online. And now a lot of online retailers say it's such a headache because all the stuff is coming back. I have to work on it, I have to clean it. So at the end of the day, I think there will be something in the middle. From the US, I hear from my colleagues, for example, that like the Amazons and the IKEAs are coming back to the high street because because they need a shop, they want a shop. So there is light, I think, at the end of the tunnel, but as most of the subsectors like retail or office, it will significantly change, definitely. High street retail could also be used as a logistics hub because there's a big need. In Berlin, there was there's this hotel. It's a big Motel 1 opened, and there are two tenants. It's Motel 1, and it's WeWork in the city center of Berlin, and they have, of course, a parking garage below. I think 400 spaces, and then the landlord said, "Guess how many parking spaces are let to WeWork? 0. Guess how many parking spots are let to Motel 1? He said 0. So they are now in a discussion and negotiation if they can reuse the space into last mile logistics, and that's also the same for retail. I'm not negative. It's just a transformational process we will see for the next, I would say, 5 to 10 years. I think there is a need of inner city retail use, perhaps in a different shape, more in also like pop-up stores, etc. That's something that's more and more coming. So we have to take a step back from this old view. Okay, I have a lease agreement, 15 years to retailer, save, put it in a box, and I don't have to do anything. I think it will be more an operational thing in retail. You have to change concepts more and more, which increase, of course, capex, maintenance, etc., operating costs. But I'm in general not negative on retail. I think it will change, and we see US and also UK is a bit further down the road. Of course, there are much more retail spaces than in Germany and other European countries, but there will be a transformational process which will show us a lot of opportunities, I'm sure.
Well, having created the largest high street retail portfolio in Germany through 54 cities, I think we have a view in terms of what's happening. Our personal view, or our corporate view, is that if you're not food anchored in today's market, you have a major issue in retail. Yes, e-commerce is having a disruptive effect. It will continue to have a disruptive effect in the white good area and in the leisure area. We basically see a number of future potential difficulties with some of the tenant bases. But I think the point which I would agree with Thomas, if you buy in the right location in these cities, changing dynamics of the urbanization means that those locations are still good, but the nature of use and how we utilize those locations will change. That goes back to my earlier point. This differentiation between retail, commercial, living, it's blurring now. We're looking at urbanization, which is a mixture, and you have to look at your cities in a different way. So when one talks about AI in retail or changes in the office patterns, think about the collective. Think about how your tenant, your 21 to 28-year-old wants to live. They want to have a small apartment. They want to go out socializing. They want to have to work around the corner. They want to be with their mates in a coffee. This change in urban dynamics is impacting all the areas. So we can't be so black and white and saying retail, office. You have to look at it in a totality, in some respects, a holistic mindset.
And another thing, if I may, is also that during the last month in Italy, we keep hearing retail is dead. I do agree with the two of them. It is not dead. It's changing. It's changing phase. I mean, of course, we come from the U.S. experience, but the U.S. market on the retail point of view is completely different from ours. So the drastic oversupply of retail they have, we do not have. The density they have in retail per capita, we do not have. They have big shopping, they wholly have shopping centers. We have other subsectors within the retail spectrum. So there are differences. And in Italy, e-commerce accounts for 3-4%. In the US, it's 15, 20 probably now. Even though it's growing probably 20% every year, but still the situation is quite limited. And on the other hand side, as they already said, it is changing in terms that since probably 2-3 years ago, the big food was the anchor. Now the anchor is the sensation you can offer to somebody. The shopping is experiencing something new. So entertainment, retailtainment, these are the new trends of retail, but it doesn't mean that investing in retail is not profitable anymore. It is not dead. It is just changing. One thing that I wanted to stress in terms of cross-border investments or international investors looking at Italy, especially for retail, but also throughout all the other asset classes, one issue for us is we are not capable to offer the dimension that these investors want from us. So in retail, this is evident, of course, in order to reduce risk, even if you are a value-add or opportunistic investors, the bigger the better. It's always the same formula that applies to retail anywhere in the world. But also in the other situation, unfortunately, look at, for example, the hotel business. Most of the hotel situation in Italy are 40 rooms. None of the international investors is interested in 40 rooms. Probably those few who look at boutique hotels, but probably only in the 4 main cities. And the same is retail. I mean, if you're going to build a 20,000 square meter retail park, it doesn't say it doesn't work, because probably in that specific situation it worked. So it's interesting. Just someone who asked about investing in the south, it is an issue. There must be someone willing to invest in a 20,000 square meter retail, because in that specific situation may work. Difficult is to find.
And I think that's an interesting point, and also the blurring of things. I mean, there's a copy of it outside because I forgot to put it outside earlier. So when you came in, the magazines weren't there, but you'll be able to see one on your way out, and we deliberately called it Living Retail, partly to prove that retail was alive, but also because it was much more moving towards that sense of retail being part of something. And I had a discussion with the ICSC, which is rebranding because the European side has moved away from the US side. And that's going to be looking much more at retail, but as part of urbanization, those strategies, placemaking. So it's changing. And I mean, we were asked in the magazine whether or not, we were including things like cinemas, leisure, dark kitchens. And so it's just interesting to also to see how a number of different things are beginning to come into this category that weren't there at all before. There's one last question which is on Slido that I want to pick up, which is just where is Italy in the cycle compared to I suppose the other European core markets, Germany, UK, France?
If I have to compare Italy to the other countries, probably we are a little step back, I would say. So probably, I remember last year also in our report in Europe, it was said that real estate cycle was in the late trend. So it means that we are basically at the top, and we are expecting that something is going to happen. And generally, I have to say that Italy probably it's a little step behind. So this is probably due to the fact that we are still working on many items, because coming back to the logistics team, effectively also we have one of the main developer for logistics in Italy who is working with Amazon, etc. So there are a lot of let's say development and area on which to work on, which are very attractive also from investor point of view. And this is for sure a point. Also as concerned the other point, I totally agree about the fact that nowadays what we are seeing it is that more and more we need mixed places, so it means that probably we need offices that are also places for staying and having leisure, etc. We need to be close to food, and so probably the main trend that I'm seeing is the fact that we need more and more mixed places, mixed used, and when developing, you have to think about that.
Just a couple of things, and maybe if I just get these from each, and you can choose to answer either both or which one. One of which is, what do you think the key trend in capital flows will be? We've talked about what they've been for this year, but what do we think they'll be for next year? Lots of interest, for example, in terms of we're seeing huge amounts of Korean capital coming over, more Japanese capital, but also what's particularly happening with the German and Italian capital. And secondly, where do you think capital should invest in the German and Italian markets? So where are the best opportunities? Who should we start with? Let's start with you, Gabriele.
I think that resi and especially student accommodation now is the moment to invest in. But again, also because we are going to touch cities that are not just Rome and Milan. I do think that on a speculative point of view, Rome is going to be much more interesting than Milan in the midterm, but just because everybody understands that Milan is so attractive, but also so competitive. So if you're looking for high return, probably now Rome is the moment to invest in. I would be very happy to say South again. In a way or another, we had to start investing in the South. And again, I do not see much risk when it comes to investing into the hotel sector.
Good. Christiane.
No matter where or in which asset class you invest, I think it's very important, as mentioned several times before today, to have a ESG strategy, first with binding targets and adopt a life cycle approach, so taking into account developments which might be relevant at a later stage in the real estate or investment life cycle. And last but not least, as also Leah said in her presentation in the closing remark, keep in mind that it's about the people using the buildings in the end. So the recommendation is to collaborate with the users, with their clients, the property and facility management, and all the stakeholders.
Okay, good.
Let me touch the first question about capital flows. The Koreans, unfortunately, in the last 3 to 6 months have had a bit of a hiccup. They haven't been able to replace their money back in the Korean domestic market, so there has been significant number of transactions which have failed, where a Korean entity was in the forefront. So please be aware that the Korean capital, whilst it is significant, is now being very selective, and a number of vendors are not wishing to have a Korean buyer on the other side. Where the future is, though, out of Asia is Japan. I was in Tokyo last month. There is up to 40 billion plus of capital to come out, if not greater figures. And that'll take 2 to 3 years. They'll come to Europe, and they'll come in the core markets and residential. They want that sustainability, and they want that income flow. So I see Japan becoming significant as a player in the European market over the next 2 to 3 years. The North American capital will stay more on the value add side, but the Canadian capital is very much core. It's come to Germany, it's come to France, it'll start widening its footprint across Europe. But intra-European flows are by far the most significant. 65% of all transactions in Europe are done intra-Europe. And I am seeing now the Scandinavians, the Finns, the Swedes now, the change in the Norge Bank investment criteria. We're seeing a number of those now reallocating, increasing their allocation. So whilst we see these international flows, we cannot and should not and will not ignore the intra-European flows, which includes Italy into Germany or into Europe generally, and also Europe into Italy. So they're the flows. They will be chasing more core plus, but there will be a value add component in selective sectors. One thing you have to consider is regulation. We've talked about ESG regulation. There's also sales regulation coming through the EU. So be careful when people come to you with product offerings, make sure that they are regulated, because otherwise there could be challenges for you and indeed the person offering that product. But then looking at sector specifics, and I have to come back here, I think here for us in Italy, it's residential and micro-living. I think anything else for us at the moment would be challenging, because I am concerned, and I think a lot of my investors, on the political risk here in Italy. We haven't touched upon that today, but I think that there is a factor there to be considered still. And I think that's not just Italy. There are other territories in Europe, I would have to be honest. But Italy does have a weighting against it because of its political instability. We just have to deal with that. It's a factor of life. But I think for me, it's residential and micro-living into Italy, out of Italy, across Europe. It's the urbanization and micro-living with logistics.
Okay, as concerned the capital flows, I agree about your view. Effectively, I think that we are going to see Asian flows, generally speaking, and for sure we have seen Korea very active in the recent past. US also investor. I think that they will continue in their role investing in development and value-added project. So I agree with you. As concerns the sector, probably in my view there is not really a specific sector, but more something, let's say, some regeneration project, because effectively we are living in a so changing time. So you will need to reconsider, for example, how to change an office and transform it into residential, perhaps into micro-living, etc., something like that. So it means that probably you need to think about projects for requalification existing buildings or changing effectively the nature of the building. So I think that this will be one of the main trends for the future.
Okay, good. And last, maybe just pick up, because we haven't really covered it, but just very briefly pick up Berlin, because obviously that's appearing in the, right up at the top of the list of international intentions. And if you'd have looked 10 years ago, Berlin wouldn't have been there at all. It wouldn't have been seen as particularly investable. So it'd be interesting just to spend a minute on Berlin as well.
Answer to the question, where should I invest in Germany? I had some things on my slide. I would say the market is where it is. Pick the right partner, buy it or align interest with him in Germany, a local partner. I would say beds and sheds is something where there's a lot of room for improvement. Can be micro-living, can be something else. And the other sector is office. Both sectors with a value-add strategy. We still have a huge stock in Germany of from old office buildings from the 50s and 60s. After the Second World War, it was all rebuilt, which is now up to be demolished, refurbished. I would pick these two types, recycle this asset in a context of ESG compliance with new concepts, talk to the young people to get the right concept. I think that's a big opportunity. There is a huge need in Germany. Could be in the core cities, could be outside, could be B city. On pure play residential, new development, it's also reflecting the discussion in Berlin. It's a sentiment. Every Asian investor, every Middle Eastern investor asks me what's going on there. So there's a legal component of that. Of course, Christiane could comment on that. Nobody knows if that's legal, what's happened there. So nobody knows if that will stay in place, but it's a sentiment now. We are currently selling two things in Berlin, one resi portfolio. Prices are down for this pieces of old stock, which is infected. It's not everything. Everything constructed after 2014, it's not impacted. Prices are down 10 to 20%, full stop. A lot of investors say, I see Berlin as a long-term bet, like the Blackstones. They are happy, all this stupid money is away now, we buy. We are fully committed to Berlin, and even if we have some political hiccups now, in the long run, it will be a good bet, and that's true. But the sentiment is, and the other one we are selling is a large development, one of the largest developments in Berlin for office, and even there, one of the largest US developers looked at it, was pretty close to signing. He said, I hear this discussion, it's about resi, but we see that the sentiment in Germany is changing, negative, so we put Berlin on hold, even for developments in the office space. So that's a bit of a critical discussion. Legally, I think nothing really happened, which is there's no law in place. So in pure play residential, there might be that you are in a situation in political discussion if you develop residential, which is truly the right strategy, but you are on the political agenda, I would say, if you do that. So I would go office and the beds and shed strategy more around micro senior things when you're not on the radar of the pure play residential market. That would be my best.
Just one thing to add. Douglas mentioned something very important, urban regeneration, and also Thomas said local partners. I think both the teams are an issue in Italy because, as the audience might know, as you might know, for example, the municipality of Milan, within the new urban master plan, the PGT, have monitored more than 100 or so ghost buildings in the city. So, and of course, they are happy to facilitate the renovation of these buildings. There are large areas all over Italy belonging to the state portfolio that needs to be requalified. The issue that I see with regards to international investors is that no international investors, and I can understand and partially agree, want to take the risk, the urban risk, in order to get the development risk uncovered. And so in terms of local partners, as we know, anytime, anywhere in the world, when you go invest abroad, you need a local partner. I still think that in Italy there is a lack of developers willing to take this kind of risk. Nobody can discuss about the Italian construction quality. The problem is that there are not so many real developers willing to just take this kind of risk, meaning, for example, participating, having the monitoring and analyzing the state portfolio, participating to an auction with an eye to the final investors on a forward purchase basis. We still need this kind of subject within the market in order to sort these things out and make them workable somehow.